Okay. Let's see. There we go. So welcome to another edition of our The Expert Speaks. And this month, we really wanted to figure out something that is not necessarily always talked about, but is definitely extremely important in this process because it can make or break your transactions. It can lead to either a smooth transaction or extreme complications that you have to deal with later and or at that time. And for those of you who are here who are into wholesaling, creative financing, any of the like, you definitely want to pay attention. But also if you're here and you're looking at buying like a multifamily, or you're buying your next investment, or you're looking at commercial property, you are also going to want to pay attention, because just as important as financing a loan is doing your personal financial statement, finding and sourcing the right properties, proper transfer is also extremely important. So many of you may or may not know, I actually started not on the finance side. I actually started on the title and escrow side. When I bought my first property, I tell you guys all the time, I bought my first property when I was 25, and I had no clue what I was doing. And I was sitting at the table. Someone shoved a bunch of papers in my face and said, sign, sign, sign. Well, back at that point in time, you kind of signed the same day. You found out your numbers the same day. Like, a lot of stuff happened the same day, and you had a really short period of time to do it. Well, me being the person that I am, I had to read them. And so the escrow officer kindly stepped outside, and I actually legitimately read the majority of those documents prior to signing them, because they were extremely important, for one. And for two, I needed to understand what I was doing. Fast forward to me being in a situation where I didn't know what I wanted to do with my career. A friend of mine had been in title and escrow. She knows, me, my personality. I love people, but I'm also like someone who pays attention to numbers and details. And she was like, Brandy, I think you would really like this as a business. Ended up moving out of state. Didn't know what the heck I wanted to do, and decided to do a little research. And I called around to several different title companies, and I just talked to escrow officers and said, what is it that you do? I heard of it. I saw it. I know it has to be more than this. Like, what is it? I found a few really, really sweet people who took, 15, 20 minutes to tell me what it was. And at that point in time, I was in Washington State, and Washington State escrow officers basically go through a process that's almost as arduous as getting a bar, like a license to be an attorney. Like, it's that deep to be an escrow officer there. And so that had to say something to me, right? I ended up reaching out to who turned out to be the regional manager of Fidelity. Didn't know it when I was on the phone with him. I asked him the same question, kind of find out. And he invited me to come in to talk to him. He gave me my first start in this industry as an escrow assistant for Fidelity. And the rest has kind of been history. I ended up being one of the youngest escrow officers to manage offices in both Oregon and Washington, as well as when I moved back home to California, until I ended up moving to Texas. This was all before the market crash, so there were some things that happened a lot differently. But one thing that title taught me was that everything is not always as it seems, as well as there are some things about the way property is transferred that really matters that a lot of people miss. The other thing that title taught me is that one, title insurance is the only insurance that works totally opposite of everything else that we know. You get car insurance, you get home insurance, you get life insurance, any kind of insurance that you can think of, your warranty insurance it always moves forward. So from the time of acquisition forward, you're protected, right? If you get sick, your health insurance protects you the day after it actually activates. If you get a car and you get into a car accident, it's the day after. Well, why does title insurance work the opposite way? Come to find out that it's more important when it comes to transferring property that you take a peek at what happened before you acquired the property to make sure that you have true ownership today. And so I work with and have worked personally with Sarah multiple times. I received amazing customer service. In fact, if I ever do any kind of refinances that I can, or any other transactions that I can direct title, then I always try to direct them to her. She is an escrow officer that works with Alamo Title. She is nationwide. She is extremely knowledgeable. She is extremely friendly. She's got the support, the staff. Like, I just can't keep saying enough about her. And so when I reached out to her to ask her whether or not she'd come and talk to us and do like a Title 101 type class for the group, she was more than willing to do so. I'm going to let her, as well as Amanda, talk a little bit more about themselves and their companies, but I just kind of wanted you guys to know that part of it. Learning the title and escrow side has actually helped me be not only, when I was working on the secondary market, not only someone who was able to understand things on a greater scale, but as a lending and real estate professional, it has definitely helped me weed through a lot of situations that people who don't understand this miss all of the time, right? And so I want you guys to pay attention. I know that it's not something that people talk about, but I definitely want you guys to pay attention to this because in this group, we want you guys to be empowered to be able to do the best that you can with every transaction, because generational wealth is not about getting property. It's about getting it, maintaining it, and transferability of that property to your generations to come. So without further ado, I'm going to go ahead and shut up my mic, turn it over to Sarah while I work on giving her rights. So if she needs to, she can share her screen. All right,
Awesome.
Sarah.
Thank you, Brandy. Much appreciated. Yes, I am Sarah Clay with Alamo Title Company, and my colleague is Amanda Clower. She's actually our national account manager. She is a walking book of knowledge in this industry. So if everyone wouldn't mind putting where you're from in the chat, that will kind of help me maybe target a little bit more specific to your areas. I am going to be speaking from a Texas standpoint today in the title business because that's where I reside. So I'm located here in Fort Worth, Texas, but we are a Fidelity branded operation. So Fidelity does own us, which means we are the largest, one of the nation's largest title insurers. So we can insure nationwide transactions, commercial, residential, all of anything you really have. We have kind of worked pretty hard this last, I guess pretty much since COVID, we've implemented some systems within our company that allow us to operate a little bit, I guess, hands off, where we allow you guys to deliver your personal information and your earnest money all through our secure mobile deposit app. And that was created by Fidelity. So that app is called Start in Here. So that just gives you guys a little bit of reassurance so that you can deliver that earnest money if you guys are, across the world. You can deliver any of that through our portal, and all of your buyer and seller personal information can go through that app as well. So today I'm just going to talk a little bit about what we do as your title company, what the commitment means for you guys, because a lot of folks, you realize you don't understand what the commitment means, and it does behoove you to know that commitment, because that is basically what we are ensuring and clearing so that we can get you guys to the closing table. So we'll go through some things. Would like to save most of the questions for the end, but if you do have one, write it out in the chat and we'll get you an answer. Amanda's kind of on backup for me to answer any of the questions that pop up through there. So first things first, you guys are executing your contracts. You're sending those over to us. We will need your buyer and seller contact information because we are going to touch base with them. We're going to send them our emails, our welcome emails, our start in here emails that allow them to deliver their personal information that we're going to need. Buyers are responsible for delivering their earnest and option funds to title. So at the beginning of the transaction, we always get a welcome email sent out that includes just a little bit of information. It'll include the executed contract. It will include our contact information. It will include wiring instructions if they need that. And we'll also send one to the seller with a copy of the executed contract. And then we're just letting them know who we are because they want to know who they're working with. And then while the properties are being inspected, we're working behind the scenes to get the HOA's orders, the homeowner association documents, because per most contracts in the US, those documents are to be delivered to the buyer so that they know what they're walking into when they're purchasing the property. And we order the tax information, making sure the property is in good standing with the county and the city taxes. We also want to see those surveys. So if you're representing a seller and they have a survey, we definitely want to see that along with an affidavit. In Texas, we call it a T-47 that just conveys if any changes were made to the property. So you guys are going to want to get that information probably first thing, starting out, when you're at your listing appointment with those clients. Ask them if they have a survey. If so, go ahead and give them a T-47 so they can get started working on that, getting that document notarized.
Sarah.
Yes, ma'am.
Let me ask you a quick question.
Yes, ma'am.
Just because I wanna dial it back just a little bit.
Sure.
Just so that people can kind of understand a little bit more, because some people are at different levels, like in here.
Okay.
So
Gotcha.
one of the things I wanted to find out, and this is something I don't even remember if I asked you, is one, how long have you been in the title business?
I've been in the real estate industry for 13 years, and I've been with Alamo Title for 10. So I've been at this pretty much the same company since I started in this industry. So
okay. And Alamo is in all the states, right? Through Fidelity.
Alamo is basically, we're in Texas, but like I said, we're a Fidelity branded operation. So that allows us to insure nationwide. So Fidelity will be your underwriter. They will be the ones insuring your property and you.
Okay. And I saw Amanda put, you guys love New Jersey. So if someone wanted to utilize services for title insurance, that they can be in Georgia, or they could be in Florida or California or New Jersey, and actually still utilize you guys' services, even though Alamo as the brand is in Texas.
Right.
That's
it's just the paper is going to be Fidelity paper. So it's just going to be a different logo. All the underwriters are still the same. All the contacts are still the same. It's just a different logo on that same paper.
Okay. And so then you guys work with residential borrowers, you work with people who are purchasing also commercial, you work with people who are purchasing investment property.
Yes.
All of it.
Everyone.
So
Yes.
a lot of the people here are, if they are going to do residential, many of the people in the group actually have a property, right? And so part of what they're looking to do is to acquire like their next property. So their next property may be a primary, but more often than not, it's going to be investment property. Some of it's going to be residential, some of it's going to be commercial as well. We also have a few people who wholesale or are using, creative financing, or maybe they found a foreclosure, or, different things like that. And so,
we see an increase in assignments, double closes, and pass-throughs. Those are very popular right now. And so we're familiar with all of those.
Okay. And so when it comes to utilizing your services, I know you had started off that I wanted to kind of give people just a little backdrop. So I know that you had started off and you were saying that in order to utilize your service, some of the things that, they would need to do would be to like open title and then you were explaining some of the documents itself. Before you go into that, do you mind explaining just a little bit more about title insurance, like helping people to understand if you're going to either buy a property and or if you're going to transfer a property, right? Because we have people who are also selling properties and they're paying for title insurance and they don't even know why. Can you explain a little bit more about what title insurance is as a whole? What kind of policies you issue to? Because I don't even know, do they even do CLTA policies anymore? Or is everything Alta?
In California, CLTA, Texas, TLTA, everything else is Alta.
Yeah, if you can explain the difference in that. Although most people are in Texas, there are people who are outside of it. And as well as, you know, how different it can be in their experience if you're on the East Coast dealing with title insurance, or here in Texas, how it's all one company, or certain parts of the West Coast. Can you guys start there for me?
So as far as the CLTA, TLTA, and ALTA, the big picture, especially from a buyer or seller perspective, is going to stay the same. It's just a promulgated form depending on what state you're in, but it's going to lay out all the work that needs to be done to issue it, whether it's going to be an owner's policy, a lender's policy, or both. Depending on how the contract's written is going to determine who pays for the owner's policy. But what it's saying is, buyer, you are insured that you are the true and only owner of this property. If anything comes up, title company is going to cover any sort of expense, or if you need to go to any sort of mediation, or if there's a lawsuit, we're going to have attorneys represent you as well. From a lender's perspective, that lender's policy is saying, hey, lender, you are in first lien position. And if for some reason something comes up after closing and they find out, oh, wait, there was a judgment, another mortgage, a federal tax lien that was actually superior to that new loan, the title company is going to come in and pay for all of that. So it's a one-time fee for future coverage, as long as that owner owns the property or that loan is in effect. So it's kind of backwards insurance, where other insurance is kind of insuring future occasions. We're actually insuring that date and everything before it for your future. So it's kind of one of those, it goes two ways, whereas your health insurance and all those kinds of things cover what's coming up. But if you, it's a one-time fee and it's the cheapest insurance you're ever going to buy. And you only truly understand that if you're like, I don't need it. And suddenly something comes up and you're like, what do you mean I got to spend 20 grand to fix this one small situation? Or maybe your title insurance would have been $1,500 and you would have been able to wash your hands of it and have a title company like us at Alamo step in and resolve all of it without you having to do any of it. So cheapest insurance you're ever going to see.
Yeah, definitely worth it. And especially if you're an investor, just some examples of what it will cover. It covers like anybody, like forged deeds and mortgages, tax liens that are missed.
Forged deeds? What are you talking about?
Yeah, weird, right? These people have gotten creative. So yeah, we're here for it. So if someone forged a deed, or if we missed an heir somewhere along the way transferring title, if that property's been transferred, you know, numerous times, you absolutely want title insurance because it's just going to protect you. So, and it does cover, like what Amanda was saying, your attorney's fees, and it's a small fee for anything big that might come up. So definitely something you want to dive into. So good questions. Thank you for taking me back there. Sometimes I get a little ahead of myself when I get going. So thanks, Brandy. So yeah, most of that, I'm sorry, go ahead.
Oh, I was just saying, no problem.
Okay. Yes, so most of that stuff is that I'm going over is for purchase, resale, or commercial transactions. So we just definitely want to make sure we're getting all of the information we need right out of the gate, which is your client's information, all of the appropriate documentation, contact information for HOAs, and payoff for your sellers. So once we receive the title work, we are required to send that out to both parties for review. So in Texas, you have, I believe we have 20 days to deliver that to the buyer and seller from their contract execution date. And then you have a few days to, reject the title and if it's not what you're wanting to get into, then you can terminate the contract. But once we deliver that, that is what you know. So when you get that commitment, so I'll go over a little bit of the commitment because those are nationwide. They're pretty much standard all across the board. Some states have a Schedule B1 and a Schedule B2, but most of them, they'll all have a Schedule B. And in Texas, Schedule B lists your exceptions to the title policy, meaning anything that will not be covered. And then going back to Schedule A lets you know who your vested owners are, your legal description, who's being insured, the lender and the buyer, and the policy amounts. So we as a title company insure the legal description. So we need to know the legal description of the property, the correct legal description. And that also causes some hiccups down the road if we didn't have the correct legal description. So, for example, I just closed a transaction a couple of months ago where the listing agent had her sign in one property and listed it on MLS as that property, and the buyers bought it, and that was not the property they thought they bought. So things happen. So you just really have to be diligent and I guess just pay attention to all the small, tiny details. But going back to the commitment, Schedule C is the most important part because that lists what we are required to clean up and clear before we can insure the property. So you definitely want to make sure that Schedule C will be cleared up upon funding. So we can send a payoff at closing, or we can pay the tax lien that's on Schedule C. But definitely want to make sure those are cleared up upon closing. And then Schedule D just lists like the ownerships of the underwriters and agencies. So not a whole lot that's too important, but it'll also mention like your fee splits between the underwriters and agencies. And then I was going to also talk about the closing disclosure, the statements, because I find a lot of people have questions about those when they're sent out.
Before you go there, can we go back to the commitment? Just because I don't want people to miss a few key points.
Sure. Yeah.
Basically speaking, I think it's understandable. Title insurance insures the property that you're purchasing, making sure that you are the true owner, right? And you gave some examples about situations, or can you give a few examples and a few more examples about situations that maybe you have encountered where someone opted out? Because what I see a lot is that lender's going to make you get the insurance. Like as a lender, we're going to insure ourselves, right? But owner's insurance is actually in most places very optional, right? So you don't necessarily have to do it. Have there been any situations over the last 10, 12, 13, 15 years? Because I remember situations of people opting out and a few things that happen in terms, just to help people understand why they're paying the $1,200 or the $800, like why.
You know, I'll be completely honest. In my 10 years in this industry, I've never had someone opt out. So Amanda might be a better person for that question. Amanda, have you ever had anyone opt out and then
We've seen people opt out because they think they have already researched the property enough that they're comfortable with it. Or maybe it's going from a family friend, you know, it's close. It's kind of one of those like, hey, I'm getting a sweet deal. I don't really need it. But the one that stands out the most is the guy that was like, oh, I'm not going to spend, you know, the $1,200 to get a policy because I've already researched this and I know what I'm getting into. And it came back where knock, knock, hey, this was my granddad's property, get out. And it became a whole big thing. And that guy had to leave because he didn't truly own all of it. It ended up becoming much messier than it needed to be, but he was demanding that the title company fix this. But he didn't have coverage for us to step in on his behalf. We still do. We try to extend a customer service piece of it and say, hey, let us talk to the guy. Let us do a little bit more digging and at least try. But we couldn't cover his expenses. And you always want to make sure that the coverage amount of your policy is at minimum what you're spending to buy it. Because if you're buying an assignment, if you're getting a property through an assignment and maybe the original contract was $100,000 and you have to turn around and pay a $10,000 assignment fee to an assigner, you want to make sure your coverage is $110,000 and not just $100, because if something comes up and maybe the title company decides we're just going to pay out policy limits, which is the max coverage amount, you're still not covered for your full investment. So yeah, the only time I ever saw it was a guy that thought he knew it all, did all the research, wasn't thorough, and missed it.
So if he had have gotten the insurance,
If he would have gotten,
what possibly would have been some of the remedies or some ways that you could have assisted him from someone else saying, well, maybe a generation or two, I was actually an heir. I didn't receive any information. I didn't know that it was being transferred. It may have transferred to so-and-so and then transferred to so-and-so before it transferred to you. But I know now. So,
So if there was a title policy issued, we would initiate a claim. It would be assigned to a claims attorney who would try a couple different avenues. Step one, hey, let's talk to this guy that says he has an interest and see if he's willing to sign a deed to release whatever interest he had. Option two, let's see if he'll sign a deed for a little bit of money.
and then who pays that money?
The title company would end up paying that money. So it's just going to be negotiation. Of course, claims attorneys are going to see how low they can get it. The guy that had the property is going to see how high he can get it. So it is just going to go back and forth and try to find some sort of middle ground. Option three is we would pay out policy limits. So if somebody had an owner's policy that covered a $200,000 piece of property purchase price, and we could not come to any resolution with that prior owner, we could pay out policy limits and write a check to that buyer for $200,000.
So even though they may have had to give up the property because it essentially was not transferred to them properly and they weren't really the true owner, they would have at least walked away with $200,000, which could have paid off the loan, could give them all their money back. There's still at least some remedy.
That's one of the benefits of the owner's policy. It is intended, if nothing else, to make you whole again. So you are not out what you spent to buy this property.
Okay. Now, I personally have seen situations where for my creative folks where that are purchasing properties from people who are selling them after death, or they're properties that you may have gotten through a tax sale, or they're properties that you've gotten from getting a foreclosure, or someone is, has power of attorney. So that's where I've seen the most issues with people who have powers of attorney, or people just signed a quit claim deed and now they're trying to transfer it to you. Right. Like I see issues when there isn't like a true title company involved as well. People are paying cash. A lot of people who pay cash sometimes don't use title, and they run into issues because they don't have any way to truly know that the person who's signing the deed is who they say they are either. Right. So like, don't you guys, what kind of process do you go through in order to verify that the seller is the seller, right? Like, because there's fake IDs out there these days. Mm-hmm. What do you do to make sure that I am who I say I am if I'm XYZ seller?
So that is great. That's a great question, because fraud is definitely on the rise, and sometimes it's hard to keep up with the bad guys. I'll give you an example now. Like we've got a $1.4 million contract going on, and there was a deed that was just recorded in August, but it was signed in July of 2021. So it didn't get recorded for 25 months. That seems a little sketchy. So one of our requirements to make sure everything's on the up and up, especially since it's 1.4 million, is we're requiring that deed to be re-executed and recorded again. Because that 25 months, while, 5 years ago, we'd probably be like, oh, it's a good thing they found it, recorded it. But now in this day and age, with as much fraud as it is, no, we're gonna need everybody to come back in and re-execute that, because it's just a little too convenient that was found last month and now the property's under contract. Other than that, we're seeing it mostly on vacant land. Vacant land has a ton of fraudulent deeds. So one of the things we do on that is, if we received a contract on vacant land, we look up the owner, we look up their mailing address, not the address that they have on the contract, nothing like that. We go to the county appraisal district, look up their mailing address, and we send them a letter with a code, a 4-digit code that says, call us. We have a contract on your property and you need to give us this specific code for us to move forward. So that way, at least we can try to verify that the true landowner, based on county records, tax records, is the one trying to sell it. So that's one of the extra steps we've taken there. And if we do have to send a notary out to the closing, because maybe they're remote, they're far away, they're disabled, they can't make it, like all the things that could happen, we're going to have to send one of our network of notaries, and we have thousands and thousands and thousands of notaries. So getting a notary is the easy thing. We just have to make sure it's a Fidelity approved notary, because that's what helps ensure the minimized fraud. Because if something does come up later, it kind of falls back onto our network.
Okay. So then when you are getting properties, whether or not you're buying, whether or not you're selling, and let's go back to the commitment. So Schedule A is going to be really important, because you stated that, one, it's going to tell you who you have of record that is supposed to own that property, right? And then it's also going to give you that legal description, right? Why is it so important for you to actually be ensuring a legal description and not necessarily a property address?
Because 911 address changes can happen. Things can be rezoned. So we are going to ensure lot, block, meets and bounds, because if 911 has to come in and readdress a section of land, we can't rely on that address anymore, because that has changed, while that block and lot has stayed the same. So we are always going to ensure a legal description, not a physical address.
Okay. And the other thing that comes to mind for me is that the address isn't necessarily something that you can cross-reference as easily, to your point, and especially throughout history, the same way you can a legal description that actually describes the property you truly own, right? Mm-hmm. So if you're in a subdivision, like she said, there would be a master plat that would have been recorded that's going to be this section, and you own lot 6 of block 7 of whatever master plan located here, located there. But for those of you who are also in the areas that maybe it's not, maybe it's something that is a meets and bounds, you need to know if it's the southwest corner of quadrant number 5 going 150 yards to the east-west. That actually is your property line.
And if if somebody comes in and replats a subdivided property, or maybe sells off just a 2 acres out of 7, all of that documentation is going to be filed in the county records, so you can trace it all the way back. While an address change is never going to be public record, it's just going to be in sort of the tax records, which are not necessarily filed of public record. Mm-hmm. So you always want to make sure that there's a paper trail actually recorded. So you're always going to do legal descriptions. So then it sounds like it gives you an opportunity to cross-reference information, right? Mm-hmm. A lot of times you can go into a situation where you're talking or you're working with an agent and they're talking to another agent. The agent might even think that it's the buyer, and then they give you a legal description. They say they're the owner, and then you're going back in and you're verifying, yes, this is the owner. Yes, this is the property that you're actually giving money to purchase. Mm-hmm. So then
as you get into Schedule B, because I see people miss things on this all the time. So Schedule B is all about exceptions, right? What are some things that you can see that would commonly be on there?
You would have maybe some easements on there.
And what would an easement be?
An easement gives you a right of way to the property. So say you did buy that, land out in the middle of nowhere, you want to make sure you have access to the property. So you want to make sure those easements are filed. But we do accept those. We do not insure those.
Yeah, it could also be an easement to the city for like utility lines. So we're not able to insure all of that because the city can come in and do some work on it. Same thing with sidewalks, utility line, power lines. So that ownership piece right there is shared in a sense. That kind of helps make it sense. So we can't say, hey, we're going to 100% cover this, because if the city needs to come in and smash your sidewalk to be able to dig underground and get something, well, that's what they had to do. That's why they have their easement, and we can't pay that back.
Some HOA.
And the cross-reference on your surveys. That's one of the things that I think is important for people to understand. Not every state requires you to have a survey, which is another drawing of your actual building lines. Tells you where your house actually starts, stop, where your neighbor's property starts and stops, where yours starts and stops. It also shows you your easement. So if you wanted to build something on your property, the information of where your easements are kind of tells you where you can go and where you can't go, right?
You don't want to put a pool in that easement or that easement.
Right. You can do it if you want to, but So then let's move to Schedule C just for quickly before you go to that other part of it. What are some things you think people should be paying attention to when they get this? And guys, I know this is not the sexiest side of real estate, right? I'm not even going to act like it is, but I'm going to tell you that I've definitely seen people have mistakes where they got a whole free house. I've also seen people have mistakes where they lost their house and they lost their property. I've also seen people who literally forged granddaddy's signature to sell the property because he was incapacitated at the time, sold the property, took the money, and unbeknown to the new buyer, they're buying a property that now is in litigation and has, some criminal activity to it because of that too. So it may not be, as nice as saying, hey, but if you want those equity splits, that cash flow, making sure that you actually own the property is really important. Go ahead, Don.
No, I actually just had I actually got a story that I really need some questions asked, but I'll ask that later.
Oh, go ahead.
One, since we were on section B of the title, that's the exceptions and stuff like that. I typically in the past, it's like, okay, we just kind of ignore that stuff, which I know we really shouldn't. But then I know on the commercial side, there's a lot of people that hire attorneys to kind of go over, and I think that's the biggest section when you're paying them, I would assume. So is that a lot of that stuff negotiable with title companies, and that's what the attorney is negotiating? Or what is the point of paying an attorney to review that versus basically just accepting what the hell y'all put on that paper?
It could be a deeper understanding of trying to allow portions of it, because on some of the exceptions, we can add a clause that maybe allows some of it.
Okay.
We have the same question when it comes to the attorney's review.
Sarah and I actually had a situation, and it wasn't from a buyer standpoint, it was from a lending standpoint. We had a situation on a file where the underwriter for a client did not want to accept the title policy because it didn't get approved. Because lenders have to review title as well, and what's on that you might ignore, but we're not.
Yeah.
Right? and the attorney for the investor was rejecting it. That was going to make or break a $400,000 deal, right?
Yeah.
And they had some questions, and they wanted to go back and say, okay, but we need them not to take exception to this, 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 and this. And I was thinking to myself, it's okay because such and so. But then I had to ask, like, can we do this? Is this something that you can not take exception to, right? Because literally it was at the tail end. We were like the last week of closing, and she fought diligently. She went back, and she was able to go ahead based on some affidavits and some other documents and what their underwriters removed those exceptions. So it's not something that you don't want to pay attention to, right? A lot of them are common, right? CCNRs, that's a common exception. Like a survey, that's a common exception. Easements to the city, that's a common exception. So it's not necessarily.
Mechanics lien coverage is one of the ones that could be worked on and negotiated with some waivers and some affidavits.
What was that? What was that one?
Mechanics lien coverage.
Okay.
So if it's a construction or you're doing any sort of rehab work, it's one of the ones you definitely want to look at.
Okay.
Especially for those of you who are talking about, you know, how it is down, all these different projects that are going around town and people are going to start trying to buy them up.
Yep.
It's a good idea to also make sure that they had title insurance ahead of time, that when you're trying to purchase it, that you get title insurance, because you could have had, you know, XYZ contractor working with the old guy, and now he's trying to put a mechanics lien on your property now. I don't think you would like that.
Gotcha.
Right.
Okay. So sorry to delay all this. So the one question I have is, so I have a buddy. I mean, I've heard crazy stories with title where like people have been murdered and buried at properties and that kind of stuff. So
Heard those two.
like, man, so like I tell people all the time, like, you always get a policy, always fuck a title. So I have a buddy that closed that title, got title insurance, transaction was complete. And then he started working on the property. Next thing you know, there's somebody else working on the property. And they basically said, oh, I bought this as a foreclosure. The transaction was complete before the foreclosure. The title company never sent a check to the people. Supposedly they sent it after the foreclosure, but the bank never cashed a check. Therefore, like, I guess technically his transaction didn't count, but the foreclosures counted. The title still has yet to send him his money back. From my understanding, I think the title company is now out of business. I'm like, y'all might even know the story, but like, I'm pretty sure the owner of the title company is in prison, like right now, for some type of fraud or something. Shit.
Is this in Texas?
So, yes.
South Lake?
Probably. I didn't ask him what title company.
Yeah, I'm familiar.
But
she's on house arrest. This just house arrest.
Yeah, it's recent. It's recent. So
all the
property was sold.
It's helpful to work with a larger nationwide company.
I always do.
Years, not a fee attorney office all the time.
But usually, when you're going to even some of the smaller ones, aren't they usually insured and backed by like a lot of the larger underwriters and things of that nature?
Sort of. If it's an agent, they can choose between underwriters, and there's several flighty ones that'll be like, yeah, we'll take your money. Yeah, we'll take your money.
Yeah.
But
so
she's not going to tell you. She's not going to tell you. I'll tell you. Okay. So here's the thing. So there's a difference between being a direct insurer, like working for an actual insurance company itself, and they have not only are they the issuer, and they have the escrow department that handles, you know, the transaction. And there's a difference between that and then working as like an agent of, right?
Gotcha.
Think about it like being a direct lender and being right? Similar, right? Not the same, but similar. You have to be approved to be a fee attorney, right? To offer the escrow side of it. The insurance itself, of course, is going to come generally from a direct insurer, but there's going to be some releases of liability even from the insurer if the actual escrow side doesn't do what they're supposed to do, which is also why they have to have their own insurance for their accuracy as well. So depending upon, and then you have these smaller companies, right, who you can become a title insurance company if you have the right money and you have, you know, all of the structures, and you go to the state and you apply to be an actual insurer. But the bandwidth that you have in order to be able to pay out claims is not going to be the same.
Our claims reserve is 1.8 billion.
Say that again?
Our claims reserve is 1.8 billion. So if something happens, you're safe.
Yeah.
You're in good hands.
So then if you have someone who has a title company, right? And I'm all for people in enterprise and title companies. I have nothing wrong with it. I think it's great, right? But if you have someone who has a company and say they only had $1 million or $10 million, but their practices are going to now have $20 billion worth of claims, then what do you think happens to you as, you know, an insurer as well? And so those are the things that you also have to consider when you're doing, especially when you're doing creative financing. I can't say this enough. The reason why I say it more so when you're doing creative financing is because if you just do straight traditional, those lenders, those agents generally are going to direct you to larger companies that have been in the business for a longer period of time, right? And creatively, sometimes people go to the smaller mom and pop shop types because they're the ones that allow all these exceptions, but they don't necessarily, some of them have not been in business a long enough time to have experienced some of the things that happen. Some of them have some of the insurers that are B-class insurers or C-class insurance. They're not the gold standard, right? A good and title insurance company is going to have more than one option for you. But a good and title insurance company is also going to be available to be able to help you navigate things that you may not want to do because you just want to get it done. And I get you just want to get it done. But they're going to look out for your best interest because, again, title insurance companies are no different than any other insurance company. They don't want to pay claims. They offer insurance, but no one wants to actually pay the claim. So then you want to try to do the good work up front so that you don't have to pay it. You know what I'm saying?
Yeah. Now I feel that. So in his situation where he did it and he had title insurance, at this point, like attorneys and stuff are involved and things of that nature. But like, what's the possibility of getting the money back, not getting the money back? Like what happens with his policy versus the lender policy?
So we'd have to look at what led up to it and where it's at now. But I can tell you, as bad as it could get, as long as he had his title insurance, it could go to the Texas Department of Insurance, where he's going to get at least $250,000 of his money back, but it's going to take a hot minute. But the first 250 is going to be covered by the Texas Department of Insurance. Anything over that,
it's below that. It's below that.
But it's going to take some time, and there would be a claim process. But until Texas Department of Insurance is appointed as a receiver for it, that can't be started.
Gotcha.
So it's going to have to.
Is that why everybody is basically?
Yeah. But whoever the underwriter was, so whatever logo was on that commitment, should be going through all of these. He may need to initiate a claim because they're not going to reach out to. He has.
I think so.
Okay, yeah, because they're not going to come looking for him saying, "Hey, did something go sideways?" So as long as he's initiated the claim, but once that claim is initiated, those underwriters have 30 days to review it and issue a response. And that response can just be, "Hey, I got your claim. I'll follow up with you in a little bit." So they have 30 days from receiving that letter or email, whatever it ended up being, to say, "Yep, I've got it and it's in line." But it sounds like whatever that situation may be, there could be a pretty long line.
I think he was at the front of it because he started the process before like any of it got shut down and things of that nature. But at the same time, it wasn't like he was hearing very much. It was just like, hey, he's like, hey, what the hell? And where's my money? at least if I don't, if I'm not getting the house, then you like, basically like send us the money back. So like he's still, because it's a private lender, like the way we operate, like he's still paying the lender.
Yeah.
So like he don't have the house or the money.
Yeah. What city is it in?
Houston.
Yeah.
And again, this isn't to scare you guys. Like truly 99% of transactions go without having any.
Oh yeah.
Right. But with the landscape of things, one of the things that we committed to with this academy was to make sure that we were talking about what's going on today. And Don, the way the market is moving, people are starting to become creative, not just in a negative way, like not just in a positive way, right? Trying to make different deals happen. But people are also trying to figure out how to get more done with the least amount of protections for whoever's on the other side. And so it's important that you guys know this and that you're equipped. I see you smiling over there.
Well, because I didn't wanted to make it seem like, oh, this is a negative thing, and like, oh, let me scare people because they're doing it right.
You're right though.
Okay, no, what I was gonna say, like, I've done hundreds of transactions, and like from a title perspective, I can only think of one. Like I think I owned like 5 or 6 rentals at the time, but then like my very first wholesale deal was like, hey, this guy said he filed a memorandum, but y'all gave us clear title twice. And so, but that was one of those, it was like what y'all said, the shaky title companies, which ended up going out of business. Like, but through that transaction, that was my very first one. It was like, okay, I know I'm covered because I never owned the house, but at the same time, I'm like, hey, I don't really like how you guys do business. That's how I ended up at Fidelity. But because of that, it taught me very early in the game, like how important title is in this whole process, and having one of those major companies behind you, because one, like they're not going to jeopardize their brand, but they're an insurance company that don't want to pay. So, but if they do, you want to go somebody that has the money to be able to do it and the expertise, because like they got the attorneys and all the back end, and they've probably seen a lot more than most people. So they're gonna do stuff to make sure like everybody's covered. And at the end of the day, for me, like, yeah, it's one thing to cover our behind and our money, but at the end of like you're doing stuff with either private lenders or banks' money, you want to make sure you're protecting their money, because at the end of the day, like that's how you're able to eat and do these transactions. So big title companies are important. I just like once I saw like, oh, this is the topic, I was like, we just had that discussion today. I gotta bring it up. So,
No,
my bad.
You did. I'm really glad you did, because I think it's important to let people know, and that's one of the things that I wanted to make sure to have this, right? Like I know it's not something that people talk about all the time. And again, 99% of transactions happen well, but it is really important for you guys to know. So like we talked about why you're even getting a commitment, because a lot of people don't even look at them. They don't even pay attention to them. And it has a lot of really good information on there. And part of what Sarah was talking about, even when it comes to like Schedule C, is you need to kind of see what is you're up against. There are times where people have been in transactions and they're like, at the last minute, the seller has an IRS debt. He has an IRS lien. Well, that was on Schedule C. You knew actually a week and a half ago. If you would have paid attention to the commitment, you could have gotten out of the transaction beforehand or verified that they had the funds or that the payoff had been ordered or anything that would not have delayed it. So the main thing and the main reason, and Sarah, I didn't mean to hijack.
No, you're good. It's fine.
I want people to understand that it is really important, and it's a step that you don't want to miss. When it came down to my grandmother transferring her properties to everyone. So the cool thing about the way that the trust was built is that all her properties had already had a title search done on them, everything. She had already had them insured. So when she put everything in trust, she also did that through a title insurance company at the time, the escrow services at the time in California, so that when her, passing came, there were no issues with how that property was transferred to her heirs, right? What deeds you use. That's one thing we didn't talk about that I would love for us to talk about is the importance and the differences in the deeds. Like, quitclaim deed versus general deeds versus special warranty deeds. Like, what do they do? What don't they do? And why is it important to pay attention to how property is being transferred to you?
Yeah. We actually just kind of went over this, Amanda and I. There's several type of deeds out there. One that we are not fond of is a quitclaim deed. We do not recognize those. So we're going to want to in Texas, yes. So you have your typical warranty deed. Let's see. I can kind of brief you guys really quick about this.
Why is it that you don't? Because I hear a lot of people say all the time, "Oh, I'm just going to quitclaim that," or you hear people say, "Oh, just add your children, get a quitclaim deed." Why is it that you don't recognize quitclaim deed?
Long story short, it's because there's not enough liability on the seller, to be honest. But Texas also calls those limited warranty deeds at the end of the day, or no warranty deeds. But it still has the word warranty in it. So there's a similar product, although still not favorable. It's just, it doesn't have enough. It just says, whatever I may or may not have, I'm going to give to you. And you're like, hold up. I need you to say that you at least have this property to be able to convey it. But like a quitclaim deed is just kind of saying, maybe I do, maybe I don't. Here you go. It's just not solid enough for what Texas
versus a general warranty deed or special warranty deed. What would be the difference?
So the general warranty deed is going to say the seller is warranting all of this property as far as it goes. A special warranty deed is going to say, I'm the seller and I'm only going to confirm when I have owned this property. So maybe I held it 3 months, maybe I had it 15 years, but that's all I'm going to attest to. Where a general warranty deed says, yeah, I'll take on all the liability for all the prior people. I got this.
So one is going to give you a maybe.
Yeah, one's going to say this much time, one's going to say all the time.
Gotcha. Okay.
So do we need to be buying everything under special warranty deeds? Because it sounds like
you want the general warranty deed.
No. Well, let me rephrase it. Well, I'm asking, do I buy under that? Because do I need to sell under that? Because if I'm buying under general, they're conveying all of it. But then when I sell, like, can I sell under a special?
So you can, but it puts a little bit more liability back on you because you've only said, yeah, I can only confirm what's going on right now. Let's say 2 owners ago, there's a lien that wasn't resolved and somehow it slipped by for 3 conveyances. We're going to come back and say, hey, look, you said when you owned this, there was nothing else going on, but 2 times ago there was. So I'm going to need you to foot the bill for that. But if you had signed a general warranty deed saying, hey, look, I've got this and everything back, we're going to be like, okay, well, we're just going to keep going back and back and back to try to recoup, but it's not going to be on you. So general is the way to go because a special can put some of that owner's policy liability back on you.
Did you know that, Don? Did you know that?
So, general is the way to go.
Go ahead, Ashley.
Hello, ladies.
Hey.
Quick question. So I know obviously depending on your working relationship with the title company, how do you all feel about, especially maybe people who do like that high volume, doing like those preliminary title searches just to kind of see like, hey, is it something we even want to go down this rabbit hole? I'm probably hearing some red flags. How do you all kind of feel about those? We
call them scrubs. We'll scrub the property. which we don't mind. If you're going to send us like a spreadsheet of like 200 properties, you'd be like, hey, can you scrub these real quick? We're gonna be like, can you give me a minute? We do have a portal called Alamo Advantage, and we can get you a login for it. And so you can run property profiles and see who owns it and what's going on with it for free. So if you do really have a lot or you want to move quickly at your own pace, we can get you set up with a login for all. Sarah can do all that for you. And so get you all set up for that.
Oh my goodness, I love that. Okay.
Great question. Ebony?
Hello, hey ladies.
Hi.
Question about vacant land. So are the sellers required to give you any additional information, like fill out forms or any special information to help you with research and avoiding fraud? Or is there anything else that you need from them?
Yes, so when we get a vacant land order, the first thing we do is research that land in the tax records and see what the owner's mailing address is. Then we're required to send them a letter with a 4-digit code. Once they get that letter, they're going to call us with that code to let them know that they are the actual owner. Some other things we do to ensure that we're not getting scammed is we do require the buyers to send a wire transfer on those. Because cashier's checks have just gotten a little bit tricky. But yeah, we definitely want to make sure the seller is the one signing that property over. So like we kind of mentioned earlier, we'll send out a notary if they cannot come into the office, that our notary is Fidelity approved and bonded and insured. So they'll go out and vet that seller and make sure it's the actual seller that we need. So it's such a huge fraud game going on right now with land. So that's a great question.
Okay. And one more question. Barring any title issues, how quickly do you guys close?
Well, if everything's all clean and clear, we can close as quickly as we get title work back, which is typically within 2 to 3 days. For most areas, sometimes it does take a little bit longer depending on how quickly that county can get us all of the documentation we need. But yeah, some can go down in under 7 days. So
Okay, awesome. Thank you.
yeah, you're welcome.
Good question. Ashley?
Okay, I had another question. So especially if we're working with the seller, usually we like to kind of communicate everything going, as far as checking in, updates on title, closing, all the things. However, there are instances where for whatever reason, it kind of the message comes off a lot more firm and stern for those sellers who are just like, oh, I don't know about this, and why do I have to, which this happened recently.
Wait, say that again. I'm getting a little confused.
Oh, sorry. Okay, can you hear me?
I can
Yes.
hear you.
Okay.
So are you talking about from a position of a realtor, the buyer, like
So
a little bit?
yeah, so the scenario was obviously I was communicating with the sellers. The deal was wholesaling. But then for whatever reason, seller kind of felt like, well, why do I have to, come and give them all my information? I'm like, ma'am, you have bought and sold several houses. They have to identify who you are, if you're doing this in person, whatever. But what really kind of made the seller feel more comfortable was the attorney calling like, hey, she's not, speaking out of turn. This is something that we have to, you have to provide to make sure everything is dressed. So that's always kind of my thing. I like to know about title companies is like, hey, if I kind of need someone to, be my advocate on behalf of, hey, we are doing all the right things. How do you guys kind of feel about just kind of really carrying that torch home?
So
Right. Yeah.
Sorry, before you answer that, I think it's important for people to understand what it is, or like a point of having escrow and the position of escrow in the transaction too.
Right. So we're basically the middleman, and we are trying to get all of the communication and also distribute that communication. So we are very adamant that getting that contact information from the seller and buyer right out of the gate so that we can get in touch with them. The first thing we're going to do is send them a welcome email that just kind of introduces ourselves and sends them a copy of their executed contract. And then, yeah, we'll call them and, you know, assure everything. We also have an amazing in-house attorney that does specialize in Texas real estate. And he is amazing. He will answer your phone calls or your clients' phone calls. So if they're ever just, you know, hesitant, they're not sure what we're doing, then they're always welcome to call our attorney if we just don't make them feel reassured enough after we've sent out all of our initial communication and done our check-ins with them. But we will get the information we need, whether we have to get our attorney involved or not. Hopefully, you know, they're not that hardcore, but if they're those type of clients, we'll do what we got to do.
Does that help, Ashley?
It does. And that's always like my, like, hey, like, I'm not trying to do anything illegal. I just will, you know, but sometimes it kind of carries a bigger sword. Like, hey, why don't you just go speak to the attorney? You know, I'm not conveying something correctly. That's all I kind of would prefer. So that's always like my biggest question with, you know, the title companies, if they have an attorney on their team, and if obviously that's their comfort level to kind of, you know, really advocate that no, everything is okay. This is the process. You're not being scammed. Everybody calm down.
Yeah, and right out of the gate, Ashley, if you delivered a contract to me and you were like, hey, my seller just needs some hand holding, like we take that and we'll deliver the hand holding. We can call, we can email, whatever is most comfortable. We have a great team.
About my files once they come to Sarah when it comes to that.
Yeah, you know, Brandy, I think you were talking about our file with all of the exceptions we had to get removed a couple of months ago.
Yeah, I don't even think about that. Like, not only when I worked in title and escrow, but being on the other side of that, actually, the role of the escrow agent is to, they have a fiduciary right and responsibility to make sure not only that the contract terms are taken care of, but they have a customer service responsibility to the client too. So when it comes to things that are really outside of maybe your expertise too, because again, you're working with people who don't have agents. So the agent would normally be the buffer to work with the seller to make sure that they understood and that they were doing the things that they're supposed to do, but they don't have that. And you're the person trying to buy it to, you know, wholesale it to someone else. So that can give them some sort of anxiety sometimes. So it is helpful to have title and escrow come in and say, no, we're the ones who are actually here to make sure that everything is done correctly. That takes the responsibility off of you, because then you can just be the buyer, you know, in that particular transaction, and then let them handle assuring them that the transfer portion is done properly. That makes sense?
It does. And that's what happens, right? Everything is off market. There's no agent. So I am trying to advocate, but then I'm like, okay, I don't want to muddy the waters or cross any lines. So if I'm kind of feeling like, okay, nope, I need this person to kind of come in and pick up the baton because I don't want to misspeak. So no, it makes sense. Yes.
Yeah,
Okay.
that's very typical on, you know, investment or wholesale deals when you don't have the real estate agent. That's what we do. We kind of take our place and we're the communicator. So that's really no issue at all, whether or not it has to be me or the attorney communicating. We'll get it done.
Awesome. Well, Sarah, I appreciate your time. Guys, if you want to stay on, I'll be on for a little while longer. We can actually talk about some stuff if you guys have scenarios and stuff like that. But I did promise Sarah that I would only need her for an hour, and she's been here for an hour and 10 minutes, and I know she's got her babies to go back to too. But if you guys have any last questions, let me know right now. If not, I'm going to release Sarah and Amanda. Thank you guys so much for
Thank you.
And being with us. If you guys enjoyed this, have other kind of questions when it comes to it, I can always ask her to come back, even if it's just like a question answer type session, to come back to talk to everyone. You see her contact information here. I'm also, Sarah, send me that one in email. I'm going to put it in the group.
Sure.
so that you'll be on there also. But I'm going to stay on. If you guys want to ask any other questions, Don, we could talk a little bit more about your situation and scenario. Or if you guys have questions about anything else that you guys have going on, we can definitely do that.
Yeah.
But thank you so much, Sarah and Amanda. It
Yes,
was so
thank
nice.
Thank you for having us.
Yeah,
I
thank you.
really appreciate you guys.
Bye.
Yes, you're welcome. We'll see you next time.
Okay.
Bye.
Bye. Okay, ladies and gents. So what's been going on? What have you guys been doing? I know I've been, let me stop this recording because we're going to have this for something else.